Imagine filling a bucket with water that has a small leak at the bottom. No matter how much water you pour in, some of it always seeps out. Over time, the bucket never fills to its potential. In the world of investing, those leaks are called transaction costs. They may seem small in isolation, a brokerage charge here, a tax there, but over years they silently eat into your returns and prevent your wealth from compounding to its fullest potential. Transaction costs refer to all the fees, charges, and taxes that an investor incurs while buying, selling, or holding financial securities. These costs are not directly visible in the market price of the asset.
आप जानते हैं 93% ट्रेडर मार्केट में पैसा खो देते हैं। गलती मार्केट की नहीं होती, गलती हमारे माइंडसेट की होती है। मैं हूं जीसी शर्मा, घर घर इन्वेस्टर का संस्थापक और पहले था हेड ऑफ फाइनेंशियल एजुकेशन एट नेशनल स्टॉक एक्सचेंज। 30 साल से मार्केट में हूं और मेरा मिशन है ट्रेड विद डिसिप्लिन, नॉट इमोशन। स्वागत है आपका बाउंस बैक ट्रेडर में, भारत के ट्रेडर के लिए एक मुफ्त यूट्यूब लर्निंग सीरीज जहां हम सीखेंगे कैसे हर लॉस को लेसन बनाया जाए।
But they reduce your effective returns. They typically include brokerage fees paid to brokers for executing trades, bid-ask spread, the difference between the price at which you can buy and sell, taxes such as securities transaction tax (STT), goods and services tax (GST), and capital gains tax, exchange fees, charges levied by stock exchanges, fund management fees. In mutual funds or ETFs, the expense ratio is a recurring transaction cost. At first glance, transaction costs look negligible, perhaps just 0.1% or 0.5% of the trade. But compounded over hundreds of trades and years of investing, they can reduce final wealth by 10 to 20% or more. For long-term investors, minimizing transaction costs is just as important as choosing the right stock or fund. Suppose you buy shares worth 100,000 rupees. Here's how transaction costs can add up. Brokerage at 0.3% equals 300 rupees. STT at 0.1% equals 100 rupees. Exchange plus stamp duty plus GST equals 75 rupees. Total equals 475 rupees. That's nearly 0.5% on a single trade. If you buy and sell frequently, these costs multiply. For an active trader who executes 200 trades a year, costs can easily run into lakhs, eroding profits. Even passive investors pay transaction costs in the form of expense ratios. If a mutual fund has an expense ratio of 1.5% and you invest 1 million rupees for 20 years, you will lose more than 8 lakh rupees in costs. By choosing a similar index fund with 0.2% expense ratio, you save nearly the entire amount, which compounds to huge differences in wealth. In India, transaction costs are higher compared to developed markets due to multiple levies: STT, securities transaction tax, mandatory tax on buying and selling equities and derivatives, stamp duty, charged on issuance and transfer of securities, brokerage competition. Discount brokers like Zerodha, Upstocks, and Grove have reduced brokerage drastically, but full-service brokers still charge more. GST, applied on brokerage and other charges, adding to costs. Indian investors often underestimate these costs. SEBI data shows that frequent traders often lose money not only due to wrong calls but also due to high cumulative transaction charges. Beyond visible charges, there are hidden costs that erode returns. Impact cost: large orders move market prices against you, especially in illiquid stocks. Slippage: the difference between expected execution price and actual trade price. Opportunity cost: capital locked in high-cost investments reduces flexibility. 1. Trade less, invest more. Overtrading is the biggest source of costs. Fewer, high-conviction trades reduce leakages. 2. Use discount brokers. They offer near zero delivery charges and flat intraday fees. 3. Choose low-cost funds. Index funds and ETFs with expense ratios below 0.5% save significant wealth in the long run. 4. Avoid exotic products. Structured products, PMS, or ULIPs often carry hidden charges. 5. Be tax aware. Holding assets for long-term capital gains reduces tax outgo. Chasing frequent gains, small, frequent profits often get wiped out by costs. Ignoring expense ratios, many investors stick to high-cost actively managed funds without realizing cheaper alternatives exist. Not accounting for taxes, a 15% short-term capital gains tax can wipe out trading profits. Falling for free brokerage marketing, some brokers advertise free trades but recover costs through wide bid-ask spreads or platform charges. Investors must realize that every percentage point saved on costs directly boosts long-term wealth. Unlike returns, which are uncertain, costs are guaranteed. Reducing transaction costs is like plugging leaks in the compounding machine. A disciplined investor sees trading less and holding longer not as boring, but as powerful wealth protection. Consider two investors starting with 1 million rupees each for 20 years. Investor A trades frequently, incurring 1% costs annually. With 12% gross returns, his net return falls to approximately 11%, resulting in tilde 80 lakh rupees. Investor B minimizes costs to 0.2% by using index funds. His net return is approximately 11.8%, resulting in tilde 96 lakh rupees. That's a difference of 16 lakh rupees, purely due to costs. Transaction costs include brokerage, STT, stamp duty, expense ratios, and hidden charges. They look small individually but compound massively over years. Indian markets have higher costs than developed markets. Minimizing costs by trading less, using discount brokers, and choosing low-cost funds protects wealth. Remember, costs are certain, returns are not. Calculate how much you spend annually on transaction costs. Switch to a discount broker if still paying high brokerage. Review mutual funds and exit those with high expense ratios. Plan taxes better by holding investments long enough for LTCG benefits. Track slippage and impact cost if you trade large volumes.
You've just completed another lesson of Bounce Back Trader. Remember, trade with discipline, not emotion. Subscribe to the channel, share your thoughts in the comments, and continue your journey in the next video. Let's change that 93% story.